Suppose you had access to the Oracle. Suppose you could ask one question about the transaction industry in 10 years. Just one question. What would you ask?
工商银行认为，全行业应该以更加包容的态度，加强合作，开拓创新，以应对技术、网络、科技创新带来的冲击，实现行业转型共赢。
If we don't collaborate on the basic infrastructure, I think within 5 to 10 years we're out of business. We can't do this on our own. We've built this business together, and we need to reinvent this business together as well.
Sibos has given us a great forum to discuss the issues and the opportunities in a very intense and energetic way, and I think we've made a lot of progress in 24 hours that we haven't made in months.
The most important issue on which we must work together. Encouraging regulators to build a coherent, consistent, and unified regime of global financial regulation. We can't build it ourselves. Our role must be one as advocates. And as advocates, we need to speak with one clear and consistent voice.
One area that remains, I think, a particular challenge is the securities industry, where omnibus accounts and the lack of transparency that comes with them have been an industry model for decades. Institutions often have not known who their ultimate customers were, whose accounts and assets they were holding. This opaqueness cannot be the way that business is done in today's world.
When you look at those groups, by and large, what are they doing? Well, in the financial services industry, it's crime. It's just stealing money.
How can we simultaneously allow things like instant payments? How can we allow things like e-wallet while still protecting the customer from those who would come and steal and rob? And I think the key is going to be less about technology and more about cooperation.
Collaboration between corporations and banks is absolutely essential. It will enable banks to respond to regulation effectively and position transaction banking well for the future.
41% of the corporates who are connected to SWIFT today are mid-range and smaller companies.
Well, the key to achieve the financial inclusion is collaboration. All stakeholders coming together to make sure that the objective of reaching the banking and financial services to all households in the country.
On the topic of diversity, we have seen the talks, we have seen the actions, now it's time for results. Results will come through a real accountability, dedicated incentives, and strong measurements.
It's about having a team that has lots of ideas and grabbing the best one. That's what diversity brings you.
Sibos is truly the only event of its kind where it brings together market participants from around the world to collaborate, to exchange ideas, to challenge one another, to find better ways of doing business.
Well, hello everybody, and a very warm welcome to this, the final session of Sibos 2014. My name is Daisy McAndrew. This week I've had the great honour and privilege of being the anchor of Sibos TV, but of course I have a day job apart from that. You can probably tell from my accent, I'm British. I'm a TV reporter and presenter, politics and business being my speciality. And during the financial crisis, my job was economics editor for ITV News, which is a British channel. And we all know in this room that those years were pretty horrid for everybody. But in case you wondered what they were like for journalists, they weren't much fun for us either. I would walk into the newsroom every morning or every evening and be greeted by calls of, "Oh, here she comes, the voice of doom and gloom." And of course, it really was a doom and gloom period. But fast forward a few years to me here at my first ever Sibos, and really, I've loved the opportunity to interview dozens, and I mean dozens and dozens and dozens of people over the course of this week, and have so much positivity and some good news, and not the doom and gloom that I was used to a few years ago. So for that alone, I give you my heartfelt thanks. As I mentioned, this is my first ever Sibos. Didn't quite know what to expect, but I have thrown myself into it. I've thoroughly enjoyed, one of my other roles was introducing the Sibos University lunchtime lectures. And in case any of you didn't make it to them, they really were fantastic, and I thoroughly enjoyed that part of my duties this week. I've also been to InnoTribe, which was new for me. I didn't think I was trendy enough to be allowed in, but I got in and I was shown around, and I was presented with this sticker, which says, "Hug me, I'm a Swiftie." And I thought, well, in for a penny, in for a pound, so there we go. That's why I'm wearing this funny, strange sticker. Anyway, as I said, it has been my great honour to be here this week, but what we're doing now is having a bit of a chew over everything that's been discussed this week, looking back and seeing, have we made progress? What have we been talking about? Now, of course, being a Sibos virgin, I'm not in a position to compare this week to other weeks, but luckily, I do have two gentlemen on hand who are going to walk me through it and give me the benefit of their much greater experience of Siboses than mine. So please give a warm welcome to Stephan Zimmermann, Deputy Chair of the SWIFT Board and Chief Exec for the Americas, Chris Church. Gentlemen, come and join me. Now, I think I'll take the sticker off. I don't want to frighten anybody. Well, Chris, first of all, you've been to a number of these events. How did this week compare?
Well, first of all, wow. Oh my goodness! You look at this audience; it kind of feels like we're at a rock concert. It's amazing.
Very popular.
No, seriously, it's been a fabulous Sibos, and from my perspective, but probably more importantly, the feedback we've got is it's been a great Sibos. People, as you know, come to Sibos for a couple of reasons. Primarily to network, also to do business, and as you were alluding earlier on, that people have achieved that objective. It's a very positive vibe. The exhibition hall was thriving, and clearly people have been getting the job done. I think we've really hit it out of the park in terms of getting networking and some good business done. But it's also about the conference, and I'm particularly delighted to see we had such a fabulous conference. Across the board, the depth of expertise, the seniority of the speakers. I mean, we started off with a captain of industry. Today, as you saw on the video, we actually had an admiral. Yes, a US admiral, number 2 in the Navy. Gives you an idea of the broad range and depth of discussion. And of course, we're ending up with another captain of industry. So really fantastic. But I think I'd just like to pause for a minute and say there's a lot that goes into making Sibos such a great, memorable Sibos. And a big thank you from me and from everybody at SWIFT for many of you who've come from near and far and contributed to making this really a truly memorable Sibos. Thank you very much.
Absolutely, Chris. Stephan, we seem to have covered an awful lot of ground in just 4 short days this week, and we saw the video and there was a lot of different themes. So what would the main themes that you've picked out be?
It really seems longer than just 4 days, you know. But as you say, we had over 200 different themes going on during these 4 days. And it's always hard to pick the dominant ones, even though I think we have had plenty of discussions around how to handle compliance in an effective and efficient way. We were talking a lot about collaboration for these things that matter, to progress that together. But I think we also had discussions for, you know, how do we actually change our mindset to actually adapt to what business is like today in terms of risk awareness, ethical standards, and I think that's good, and I support that. And then, of course, I guess what Sibos University has brought here in terms of academic research and insight views, and I also enjoyed the workshops of InnoTribe, which always give us a bit of that, you know, out-of-the-box thinking. So plenty of stuff to be watched here.
Lots of ground covered, but certainly the one thing that in the Sibos TV studio came up again and again and again, and we saw in the clips, was collaboration. What progress do you think has been made?
Well, I think you're right. Collaboration is definitely, I think, one of the themes that people will remember from this Sibos. wherever you turn to in the plenary sessions, in the forums, in the client meetings, collaboration was clearly a theme that emerged. And I think we've reached a tipping point. I think that the industry has realized that we can no longer carry on the way we are. I mean, there's just so much going on. And in the past, I think there was a number of barriers to that collaboration. And those barriers were competitive edge. I think a lot of people have been doing the math now and saying some of that stuff is now commoditized and it's not competitive edge. And even the stuff that is at the margins a competitive edge, it's worth this to us, whereas the benefit of collaboration is worth this. So I really do think we're going to be seeing more.
But Chris, it is something we've heard before. I mean, certainly as a journalist, you never hear people saying, I don't want to collaborate. You do often hear people saying, I do want to collaborate. But how can you be sure it's any more than just sort of empty words?
Fair point. I think the reality is the industry doesn't have a choice going forward in many of these areas. I mean, if you look at the underlying issues that are out there, we've seen a tsunami of regulation come down. Everybody's heard of, the first wave was around surety and soundness of the marketplace. Then it was resiliency. Then, as you heard on the video, transparency is now a key issue. And in addition to that, there's concerns about, is there going to be enough collateral around there, liquidity, capital adequacy? We can't go on without collaboration. And in fact, the reason I'm encouraged to see that this will be more than just a soundbite at the end of this plenary is that we've actually seen some very concrete steps of that. You take the payment space, for example. I think it's very clear the response from the industry around the compliance, the need for a registry, a KYC registry. Everybody's going, yep, we've got to collaborate on this. And I think there's a lot more that we need to collaborate on.
Stephan, Gottfried at the beginning of the week talked about the disruptive forces, and he took us back down 250 years of history. If we were looking forward, do you think there's been any consensus this week on what the next disruptors might be?
Very good question. I was out and, of course, tried to figure out if there is a common disruptive scheme everybody would agree to. And I just have to say my observation is usually you only discover disruption after it happened and not before. And just referring to some statistics I've seen from McKinsey on the payments scheme, obviously more than 400 initiatives every year. But only a few make it because they are directed to niches, and very few make it to become really relevant for the entire industry. I don't know whether that is a prediction for the future. However, I think it just shows, there's much out there to be watched. And what I rather would say, I think the discussions we also had is, banking is still about economics. And what you just said about collaboration, I think, given that margins are lowering and therefore you have to be much more economical with your means. So you have to make choices. And I think there you have choices where you want to compete and you have choices where you want to collaborate, but you also have to make choices where you just leave the space to others.
Just leave the space to others. That's not something you hear businessmen or bankers say very, very often. Talking of personal areas of responsibility, Chris, securities is yours. We heard a bit in the opening video there. What progress on that?
Well, first of all, I was really delighted at the rich discussion around securities at the conference, and there was a lot to discuss. And just picking up on Stephan's point, and in fact the point you saw from Adam Zubin, who was speaking earlier on, back to this issue of collaboration and transparency. I think he made it very clear there's an issue facing the securities industry that arguably the payments guys are a little bit further ahead in terms of the collaboration around transparency. But as far as, if I'm reading him correctly, I don't think this issue around beneficial owner, transparency, omnibus, segregated accounts, I think the industry really needs to come together and solve this. And I really don't believe this is one of those issues where failure is not an option here.
Call to arms there. Stephan, Gottfried also talked in his opening remarks at the beginning of the week about the Oracle of Delphi, and he said that if he was allowed one question to ask of the Oracle, it would be about cryptocurrencies, virtual currencies, call them what you will. What would you ask?
It would be great to have somebody who answers these questions of whether what we are doing now is really fit for the future. And I think if I could ask a question to that oracle, of course, I would like to know if all that debate we are having around capitalization of the banks, getting prepared for resolution, responding to all these very distinct schemes of regulation all across the world, whether that will make us fit for the next crisis. And I mean, we had a poll here in the audience, where we asked, do people believe that there will be a next financial crisis in the next 5 to 20 years? And over 70% said yes, so it remains a relevant question. But in absence of Delphi, I suggest we keep on discussing that amongst us and probably bring some of the answers to our next Sibos in Singapore next year.
Plunder some of the expertise in the room rather than Greek mythology expertise. Final thought from you, Chris. Obviously, this is the end of another Sibos, Singapore in a year's time. Looking forward, final thoughts.
Well, actually, I've got loads of thoughts. It was such a rich conference, but for those who know me, I could go on. And I think, in actual fact, there's thousands of people out there in the audience, and although I've never been more popular than this, but I think there's a lot of people that would actually quite like to hear the next speaker. But I think just to keep it short, I'm really, really happy with the way the conference went. Just wanted to say thanks again to everybody for really the contribution to making this an outstanding and memorable conference. And of course, we look forward to continuing the dialogue, and most importantly, look forward to seeing all of you back at Sibos in Singapore in October. Please mark your calendars.
Lovely. Well, Stephan Zimmermann, Chris Church, thank you very much. And from me also, your host of Sibos TV, thank you for having me. Many thanks.
Daisy, that went rather well.
Daisy, thank you very much.
Well done, sir.
Thank you very much. Wow. Now, only one thing remains. I have the great honor to introduce a man who doesn't need any introduction at all. He will speak to us, I think, about the future of our business. He will be joined by a renowned journalist. It's Heidi from The Guardian in New York. You have submitted some questions which Bill will respond to, and so she will join him on stage later on. But now, my great honor to welcome Bill Gates, co-chair of the Bill and Melinda Foundation. Bill, the stage is yours.
Thank you.
Thank you very much for coming.
Well, it's great to be here. I'm going to talk to you about customers who usually save less than $1,000 and whose average transaction size is almost always under $5. And I'm going to explain to you why I think that customer is very important for the goals our foundation has. And I also hope to convince you that that kind of customer may be important for you, certainly in terms of providing good services and even in time a significant business opportunity. As you probably know, my full-time work is at the Gates Foundation now, and the vast majority of our work is focused on helping the poorest in the world. A lot of that is to do with health, making sure that children not only survive, but they also get the nutrition they need so they develop physically and mentally to achieve their full potential. And whether it's poverty or health, the world is making great progress. Absolute poverty, as defined by the World Bank, was cut in half over the last 25 years. The number of children who die under the age of 5 was cut in half as well. As we look at the next 15 years, I think we can make even more progress. And one of the reasons for that is digital technology. Digital technology is changing your business, It's changing the way that government's going to deliver services, even in areas like healthcare, tracking what's being done, making sure that workers are there, the supply chain is there, tracking things so that the quality, even in the poorest countries, can be done very well. The opportunities are incredible. And there's no place that digital technology can change more than making payment systems, making digital transactions very, very inexpensive and also very easy as the mobile phone has become incredibly pervasive. Now, our foundation recognized from the beginning that amongst the things that the poor need in order to move out of poverty, to move up to the middle class, they need financial services. The ability to save and borrow is very, very important. And of course, they do these things now, but they do them in ways that are incredibly inefficient. They take cash and stuff it under a mattress, often gets stolen or it gets inflated away. They'll buy a cow, they'll buy gold, they'll take risks, they'll have very high transaction costs. And when it comes to very basic things like borrowing money for their kids' education, borrowing money so that they can buy the good seeds in the planting season and the fertilizer so that they get the higher yield when the harvest season comes, they often aren't able to find the credit or insurance capabilities that all of us take for granted. So out of all the things our foundation does, besides health, we picked availability of financial services as one of the very top priorities. And we have a group that's talking to you, talking to governments, looking at the technology and figuring out how we can accelerate the availability of these tools for the very poorest. Now, when we first got going in this area, we did some fairly conventional things. We funded microlending. Microlending is a good thing, but given the overhead of the transaction costs, even if you assume a 0% credit loss, the interest rates are quite high. And so we decided to focus on savings and insurance. But as we looked at that, we also said that in the pre-digital world, just getting people involved, paperwork, reaching out, finding those people, explaining to them what's going on, settling up accounts, dealing with disputes. Without the digital enablement, we really didn't see that we could make big impact with savings and insurance. We made some progress in pushing those things forward, but nothing that you'd consider a breakthrough. And so we decided to put a lot of our investment in working to accelerate this digital payment platform. As soon as we get that in the right form, of course, it'll be completely self-supporting, in fact, an opportunity for profit. And our work will go into the applications, figuring out for a woman who wants to make sure that the money is set aside for the family, make sure that if there is a bad year of weather, that there's an insurance product that's easy for that family to understand and really can meet their needs, and let them track their financial activities with the simple interface that they'll have primarily through their phone. And so enabling this, getting this thing going as fast as possible will let us move up into those areas of applications. So we think digital payment systems can do more for equity in poor countries than they can do anywhere else. And so actually we'd like to see them emerge there, even if it takes longer in the richer countries. This is not a case we're just waiting for trickle down like we do for many advanced technologies. That's not good enough. We don't want to have to do it that way. Another thing we've seen in poor countries is that when governments are trying to help the poorest, what they often do is think, well, they can't identify them. They can't easily get money to them. And so they'll take some of the goods that they think the poorest consume, and they'll subsidize those. Now, unfortunately, these subsidization approaches are not very targeted. If you subsidize particularly fuels, that's very regressive because the wealthy end up using those per capita far more than the poorest do. Even things like grains, if you go and subsidize, you're not necessarily having a progressive effect. And those systems, because they're trying to distort the price, are subject to incredible leakage, corruption, where the below market price goods somehow ends up selling somewhere else for market, and that money does not get to the poorest, does not come back to the government. And so you have very inefficient systems. Now, a few countries, without using advanced digital technology, Mexico and Brazil actually did decide to reduce price subsidy and actually do direct payments to poor families. They had some conditionality, things like getting your kids vaccinated, going to school, and those payment programs were very, very successful. And so we'd like other countries that are moving from low income up to middle income to be able to do those things. But unless we have digital payments, the ability to target those things and avoid some authoritative person, including the big man in the village, siphoning off significant number of those payments, or even creating fraudulent records in terms of who should be paid, that's going to be very difficult unless we use identity systems and digital payment systems that are really quite effective at getting that money to where it's needed. So we're very excited about these digital payment systems. We think those are going to be fantastic. Now let's take a look at the digital world and what's going on globally. It is a time of very great change. The ability of computers to process data at very, very low cost, the ability of organizations to do that using a cloud service where it can be incredibly reliable and incredibly variable, where if you want lots of capacity, boom, it's provided to you. It's done on a geographically distributed basis, so things like disaster recovery, backup type things actually are abstracted away in something that you can get even from a very low cost service. The devices themselves, of course, are becoming ubiquitous, whether it's phones, tablets, PCs, even wall-sized devices, TV sets connected up to the internet, wristwatches, many, many form factors where you are going to digitally identify who you are. Even if it's not for your financial services, to connect up to your professional networks, your social networks, your communications, you will want to be identified correctly, and piggybacking that over and when it's in a strong form into your financial transactions only makes sense to make these things very simple. So when we think about what should the marginal cost of a transaction be if the identities are properly established, it is extremely low. And so that potentially points to a world that's very different than the one we have today, where users can take their money and move it to wherever it gets the greatest returns, where they can look at their allocations, plan ahead in very nice ways. So I do think these digital payment services will be beneficial to all markets in the world, but there are reasons in terms of habits, regulations, a variety of reasons why it may not actually happen there first, because we're going to be pushing it to happen in these other countries. We are seeing new phenomena, things like Apple Pay that uses the ID system to make it simple for the user. That type of thing is going to be pervasive, built on industry standards. We see things like Bitcoin that show that using blockchain technology, the idea of making sure the same transaction's not done twice actually doesn't require much cost or much overhead. The technology has that built in. Now, there's many ways to use that. You can use it in an anonymous, or what I sometimes call a non-attributed system. You can use a similar technology, but not the same, put that into an attributed environment. But that's just one thing that's out there along with these devices that really says that going into branches, using currency, high overhead transactions where you have an ID system that's off on its own, very special, kind of hard to use, that relates to your financial services, that's not the way this is going to work in the future. The financial service will connect into your overall identity store of information that you use as you roam across these different devices. Now, there are a lot of neat things going on in developing countries. One example that I think is maybe my favorite is what's gone on in Bangladesh. It was just 5 years ago that two MIT Bangladeshi brothers decided to provide mobile money. And they decided to do that without being connected with the network. So it works through the mobile phone, very expensive mobile phone, but it works across all the different operators there. Of course, very few people in Bangladesh have a bank account, but the vast majority do have phones. So they offered this service starting in 2011, and now they have over 13 million customers, and 22% of all the adults are connected up, and the adoption is on a very, very fast curve. So this is the kind of wild adoption rate that we sometimes see in the world of new technology. This one is every bit as fast as any that I've seen. So these people are getting financial services, transferring money, paying at shops, new things, applications showing up on top of that. So far, it's at 10% of the GDP of Bangladesh, about $1 billion of business a month that's taking place there. So that's a very, very exciting model that, it's just one country where the regulations got going and critical mass was achieved. Now, the first application that these things generally bootstrap off of is moving money transfer. And because the competitive services in these countries, the post office is often very expensive, very slow. Sometimes you have to pay extra just to make sure you really do get your money out of that system. They can bootstrap as soon as they have cash in, cash out density high enough that people feel good, okay, I'll put my money in this thing, and either I or the person who I digitally transfer it to, often somebody in the urban area who earns money transferring it to somebody in the rural area, they'll be able to go and do that cash out capability. But that's just the bootstrap. The first generally 3 years, it's mostly used for money transfer. But then very quickly, the merchants realize that they could directly accept that digital payment, and it would avoid a lot of complexity for them. And so slowly but surely, it becomes a digital currency. One example of that is in the place you might least expect, which is Somaliland, where the mobile operator there, Telsum, has so much going on that people hardly cash out at all. On average, it's once per month. And so there's actually more going on with the digital currency than there is with the paper currency. That's the one, although it's a small economy, where that's absolutely the furthest along. Most people know about Kenya. Kenya's built up over a number of years. Of course, the system's called M-Pesa, and that's now 31% of Kenya's GDP. Now there's value-added applications, including savings accounts, short-term loans, and the demand for those products is very strong, and we see them being adopted to different populations. And so things are happening. In fact, as we get a few of these examples, the other countries are starting to say, okay, why don't they have this going on? And they are looking at their regulations and saying, how can we enable this? I was just in India. They're moving to authorize what are called payment banks. Mexico has done the right thing in terms of the Know Your Customer regulation. So that's, really fantastic thing. And so things are definitely happening. And I would say that over the next few years, this is going to become absolutely pervasive. And so people will have a choice of how they do these transactions, and there will be a lot of innovation. I thought just to give you a strong flavor of this, I'd do a video that steps through an actual usage scenario. So this is actually in Kenya. Let's go ahead and take a look at how what this will look like just a few years from now. Well, great. So let me step through exactly what we saw there. First of all, of course, we saw the woman go into the shop and do a straightforward digital transaction. That was added to her transaction log, added to the merchant's transaction log. Very straightforward verification. He could see her face, she could see his. Simple, low overhead transaction. Then we saw the family sitting down. Actually, at the beginning, pretty quickly, the aunt had sent some money, so they were taking that money and allocating it to their future needs, including the educational account for their daughter. So they were able to look at what they project the book costs will be, tuition, uniform, other costs, and really make sure the family has in mind because that's an investment that they definitely want to make. And then finally, we had an insurance example where a crop insurance had been purchased that if the rainfall exceeded a limit where there'd be fairly extensive flooding and the crops would be damaged, there was a known payout. So just right there on the cell phone, she could track what the weather station had reported. The contract was very clear that it was a measurement of the rainfall at that particular place, and so a specific payment was made on that policy. And so there wasn't a lot of personnel overhead or complexity. It was a policy that you could understand and choose to buy literally through that cell phone interface. So the idea of typical sort of sales costs or transaction costs really wouldn't apply. So that's a product that sat on top of the digital payment service. So the first thing is, and what's basic, is that everyone in the economy, no matter which cell phone operator they use, is able to transfer money to each other. And that doesn't mean just transferring to merchants. That asymmetry, which for good reasons grew up in rich world payment systems because you had to have these funny terminals for ID and things, these won't need to grow up with that asymmetry. The payment to a person, payment to a merchant, really the same thing. Of course, a merchant can have a fancier system in terms of how they log their transactions, multiple cash registers, multiple locations, but that's all optional. The basic idea of sending money, how that's tracked, what the fee structure looks like, how you guarantee it's good funds across wherever the accounts are being held, that's done in common. And so we've got to make this not only digital, we have to have it universal, and we have to have very low transaction costs. And of course, we've seen that in some places where debit card fees get down to 1% or even less. That means that it's a frictional cost that's actually probably less than the costs that are going on in a cash-based system where there's a lot of work that's always been sort of built into the prices of the cash management. So the transaction system is the first thing. Second is that we'll draw people in. So we'll have 2 billion new people coming in to the formal economy. That's an amazing thing. To have them be able to save efficiently, not have the only choice of the money lender, or when they have a medical expense, they essentially have to sell off all their assets, their productive assets. These people will have the things we take for granted in terms of, over time, establishing a credit record. And so by seeing the community somebody lives in, how they connect up with other people, seeing how they spend money, how they earn money, you can offer certain of that information about yourself off to somebody who can look at you and create a credit score. So the idea of loans of various type are very straightforward. The simplest loan might be, I don't want to go by the mobile minutes, so loan me just for 3 days enough to keep using my phone until I can get there. That's a very pervasive product today. It doesn't involve huge sums, doesn't involve much credit risk, and if my mobile phone number's been used very heavily, it's not like I'm going to abandon it when I have lots of connections. So the credit provider looks at that record and is able to make that decision. Now, to really scale this up, things like the property I own, the income from that property, all these digital records will come in and make the idea of assessing a credit risk against somebody far more straightforward and draw people in so that they can borrow, be involved in insurance, be involved in various kinds of commerce. And this makes the barriers to enter to be an entrepreneur, to have products for sale that you can transact with people a lot less. It even means that the infrastructure providers like the electricity company that wants to build people, they have gigantic costs, sometimes over 20% of running the urban power system in poor countries is that bill collection part, and often you'll have 10 or 15% that is uncollectible. So even for those vendors, how they think about billing, how they think about credit, that will facilitate the creation of the key infrastructure that really drives these economies forward. I think the pace of change will be pretty fast here. I'd be disappointed if it wasn't pervasive in the low middle income countries, including places like India, Brazil, Indonesia, in the years ahead. There are some amazing things happening in each of these different locations. In fact, I wish I could put together the best of each of these, but I think that's the way things are going. I don't think this is something that will ever go backwards. We'll simply get more and more of these capabilities. The balance of how we do the identity systems and how that works through Know Your Customer so that we can get remittance costs to go over or down, that is something that is an important debate because certainly at small transaction sizes, we don't want the account creation or the type of auditing or the type of financial risk that the account provider thinks that they're subject to be high. And we do want to connect up at one financial flow to the remittances and get the typical 5% cost for sending those around down to 2% and even lower than that. And so unlike many of your advanced products, where if you look at a few countries, the richer countries, and just see, oh, well, I'll catch the trends there. If I do well with those, then I can just take that out to the rest of the globe. In this case, you're really going to have to look everywhere. Yes, there will be some amazing things happening in this respect in rich countries, but in a sense, the urgency is lower because the percentage costs for transactions aren't as high. It's here where you have a completely missing need for these several billion. And so we're looking forward to partnering with many of you to make this a reality to help lift up the world's poor. Thank you.
Thank you, Bill, for that. As a little bit of audience participation, I want you all to take out your phones and look at them. If you're doing the right thing, you are looking at one of the greatest computers that has ever been made in human history. Now, the kinds of things that Bill Gates is talking about, financial inclusion, they don't happen on phones like that. They happen on phones like this. This little Nokia that you probably haven't seen since 2003 is how a lot of these transactions happen. Millions of people trade money on them. So I want to ask you, how do we get cell phones to a point where they can support these mobile payments on the scale of millions of people?
Well, the phone that you're holding there, typically nowadays you'd pay less than $20 to buy that phone. And of course, you're not buying it just for the financial transaction capability. You're buying it because you get to call somebody up about what the crop price should be or find out what's going on with your relatives. So it's a pretty vital tool just from the communications piece. And then the messaging service that can tell you your account and confirm with you that you want to transfer money to another account. Even on that small screen, we can do a pretty decent user interface. Now in our video, we assume the screen had gotten a little better, a little bit of color, so that wasn't the lowest, but we're not going to have any entry-level problem because of the phone itself. And then the network coverage is pretty pervasive today, and governments are working with mobile operators to get out literally to the toughest part of the country. So those enabling factors, the phone and the network, because the communications application is bootstrapped and funded all of that, the payment world gets all of that for free.
Well, very much on that point, in terms of digital payments, you said that digital money, like Kenya's M-Pesa, will catch on in India and parts of Africa and Bangladesh, as you've said. How will that work? What has to happen?
Well, it's happening country by country because the seeing if the regulations allow for this and then having somebody take the risk to get all that cash in, cash out capability there. Whenever those two factors are in place, regulations, so somebody builds that infrastructure, very quickly the money transfer application it catches on because it completely outcompetes carrying the money around or the typical government or other physical ways that it's been done or going to the banks. And so that is the bootstrap application that then leads to the next stage where you say, okay, well, why not pay my electric bill, pay for my cell phone, and go to the local merchant shop? Why should I ever have to deal with cash? That starts to go away, and then you get these very clever products that help you think about your savings and what you want to be doing.
Right. So it's interesting that you mentioned cash at a session earlier today. Someone very wisely said cash is the enemy when you're talking about financial inclusion. But these are cash-based economies, and for people who are used to working that way, there is nothing scarier than having to deal with a bank. That's why they like to use these phones. So how do you give cover to the fact that they are dealing with the banking system but are intimidated by that very system?
Well, they certainly are going to have trust that when they put the money in, it's going to be available. And so whoever's providing these accounts, they're going to have to work with the government to make sure there's some sort of deposit insurance. That is, the money either goes to the government or to some entity that the government feels is very, very secure. And so there isn't this idea that if the company went bankrupt, that the customer funds would disappear. So you need a sort of FDIC equivalent type capability to create that trust structure. People do feel like they've gotten to know their mobile phone. I mean, at least at first it may have been a problem, but it's such a key part of their life nowadays that teaching them a few extra commands to call up, okay, here's your account. You can always go in and look and see that account. Or you can separate your money out into multiple accounts where you have different rules about how easy it is to draw it out because you want to mostly hold it for later. All of those things, we just piggyback your knowledge of the mobile phone. We don't think these people should ever go into a bank branch. I mean, we don't think that's any favor to the bank branch because, it's expensive. And we don't think that's convenient for them. If we can't do it through the cell phone, then, too bad, we're not going to do it. Nor do we think that the key thing we want the low fee structure on is the digital-to-digital payment. We don't want cash in, cash out to be too expensive, but in the long run, that's not going to be the heavily used feature of the system. The heavily used feature that we've got to be very sensitive to the fee is that pure digital payment, which can be to a merchant or to a friend or somebody you're loaning money to.
Right. And so for the banks, one of the issues that they're dealing with is that banking is a business that does much better with scale. And we're talking about people with the kinds of credit risks you can't measure. They have the kinds of assets you don't necessarily see in bank accounts. And their payments, the payments that are going through, as you said, are often as little as $5. So how do you balance the profitability of serving this customer with the socially responsible purpose of financial inclusion?
Well, you need extremely low costs and you need extremely high volume. And you're not, the decision of whether you want to loan money to these customers, I think we want this platform to be so flexible that the companies involved in the payment system don't have to be the same companies who are involved in choosing to make loans. That is, somebody could come along and say, hey, based on your willingness to share certain kinds of information, we'll come up with a credit score, and then we'll quote you an interest rate based on our assessment of the credit risk. And if you agree to it, then yes, it shows up on your mobile phone. So the people who create the enablement for this, they may choose to be involved in the weather insurance and the crop savings plan and the loan for schools type plan, or they may simply be an enabler that allows other people to come in and doing that. So you'll have to have a business case, a P&L thought for each of those, but the volumes involved here and your cost structure for assessing that credit risk mostly it's going to be software. There's not going to be anybody coming in and filling out some form at a bank branch.
Right. So one thing I know from covering Wall Street for 16 years is that the financial system is full of rivals, and they are not used to working together. To make this work, they're going to have to. So do you think that's going to be an obstacle?
Well, it can be. What you'd like is that the fee to move money between accounts held by the same company is not dramatically different than the fee to move money between accounts that are held by different companies, that there would be some reasonable fee structure. It wouldn't have to be absolutely identical, but you ought to be able to move. And to the degree that mobile operators are in this business, there has the same way that there's number portability, that means you can move from one operator to another, which is pretty much global in nature. You ought to be able to move your bank account from one location to another with only a modest fee. It doesn't have to be $0, but you shouldn't feel like you're locked in, because if they change their fee structure, or pricing or service is not very good, your money, you should be able to give a command that's not too hard and then have that money show up somewhere else. So the degree to which this happens by the industry kind of working together on standards, or to the degree to which the country, often through the central bank or through the legislative process, sets some limits on this, often it's better if the industry, if it can, in the appropriate way, get ahead of this thing and get something that's viewed as quite reasonable. But because this is helping the poorest, and that has such political resonance as it should, countries are going to look at other countries. They're going to look at the fee levels and the regulations, and there'll be a lot of copying. So the influential countries are the next 5 or 6 to dive into this, particularly if the larger countries like Nigeria, India, Pakistan, Bangladesh, where you're over 100 million people in each of those, there'll be a lot of countries that simply decide to adopt exactly the same rules that seem to be working there.
Right. So when you're talking about influential countries, you have to be thinking about India, right? You were just there. What did you see there?
Well, India's always had the rhetoric of bank accounts for everyone. But in fact, they really haven't achieved that in the sense of real usage and the kind of benefits that I talked about. And so once again, the government, with energetic leadership now from Prime Minister Modi, is saying, hey, let's go for financial inclusion. To the degree that's just measured by the number of accounts that are open, that can be misplaced, particularly the accounts that work through the normal infrastructure. When you look at the costs of doing things that way, if you let the people come into the branches and come and hand you currency that you have to process, and all the things that have been built up for those large accounts, I just don't think it's really going to work. It's only by using this mobile structure and having a type of account that literally has less features, only serviced this way, that the fees will be reasonable. So the traditional banks can be involved and they can do it. The new regulations that are called payment bank regulations, when I was there a couple weeks ago, I met with the central bank people talking about, hey, let's make those as flexible as possible, so that that's either a differently priced offering from the banks or the mobile operators or the third parties. And there's a couple that have already done a bit, that these new regulations will let them expand. So I think, I don't know if it'll be the mobile operators and the non-operators. Right now, I don't see the banks seizing this. And I think a lot of the traditional bank accounts will lay dormant, whereas these digital ones are the ones that will really get the real benefits.
And how long would it take to build that kind of infrastructure?
Well, the mobile phone penetration, the network penetration is really there. And so the only thing that holds it back is the regulatory environment that then makes somebody willing to say, okay, and to cover all of India, you could do it state by state, but to cover the whole place, you'd probably need 400,000 cash in, cash out points for people to have a mental image of, okay, my cousin over there, my aunt over there, I'll just use this thing and boom, my money transfer problems are solved, and then you bootstrap from there. So I do think we'll see some business alliances. I think we'll see some people, independent networks, and I think it'll wash out that a modest number of people will get scale. And at least the way it's going right now, I don't see the traditional banks, although they say all the right things, really thinking of this as something that they can make money on at a very low fee structure, as opposed to have a modest fee structure and just pray that nobody ever uses the thing.
Should they be thinking about it that way?
Well, we're trying, the foundation's voice among many is there saying that this is what's truly enabling. And the government's invested a lot of money in this ADHAR system, which is where they go in and take your eye print and your fingerprints and give you a 12-digit number. And now they've said they'll associate your default bank account with that ADHAR number. And I think we'll be successful at getting all these government payment systems to run through that, whatever your bank account associated with your ADHAR number is. And if you can get it and boom, there it is right on your mobile phone, that's a huge thing. So that's a bootstrap because they have significant government payments. If you get up to that level of wealth of India and above, then government payments are fairly big. Well, if you get poorer than that, then the government payments aren't very large, and so we have to use money transfer as the prime bootstrapping application.
Are there countries where it's being done really well right now, or ones that you think would be a model for how it should be expanded?
Well, I don't think everybody here is going to go to Somalia, that just showed up. They just did it and did an amazing job. That's at critical mass. I think a lot of people have been to Kenya, and it's nice if you go every year, you can see how much more pervasive it's becoming. And a lot of startups, people who will sell you a solar panel on credit, and they literally use the mobile phone network. If you don't make your nice digital payment, then they send a message to the solar panel, hey, don't work. It stops working, and then if you pay again, then it starts working. If you don't pay for a while, they'll show up and take it away. And so there's some new things emerging now that this is all in place, including lots of small shops where the only way you can transact with them is M-Pesa.
Mm-hmm. One of the things that you've mentioned several times now is governments. And in talking to bankers, one of the things that they find very frustrating and have discouraged them from going deeper into this business is the issue of the legal, regulatory, and diplomatic barriers to get governments to go along with it. You've seen world leaders, you've talked to them. How do you talk to them about this?
Well, the whole balance of what transactions in the world are going to have very strong IDs and records of person A paid this amount to person B, and that record sits there, and you really had to do a good job making sure that was person A and really good job making sure that was person B. How much governments, at what level of transaction or what transaction type will the government insist on those records being there and being available to them? And then what transaction types are simply allowed on an anonymous basis? We need the U.S., which kind of sets the tone for all these things, to think about that, because if you make it too hard for small transactions, then they're forced to just stay in the cash economy, which is inefficient, and it's not attributable, so the government's not getting any visibility into that. So if you set the requirements too high, then those $100 bills just keep moving around, or jewelry, other hard goods that can easily be tradable. If people are naturally using these systems, most of the economy, it'll be attributed, where you can go in and see exactly who's transacting, and you can have escalating ID requirements as the size of the transactions get large. You can do that. There's some amazing things once we get this stuff to critical mass we could do, where if you're like donating aid to a country, and you said, I want to watch how it gets paid to this person and this person and this person. There's certain things that you might not want it for everything because of privacy reasons, but for things where you really want to make sure it's not spent corruptly, and including certain government transactions, this idea of I can see not just my direct recipient, but I can see that money and how it travels until when it gets to a desired recipient, then I essentially take my trace capability off of the thing. So I see it as real upside for government excellence, and we've got to make sure that the regulations actually don't favor the dark economy over this world. And there is a little bit of uncertainty for, say, correspondent bank relationships that facilitate low-cost remittance. You know, will people feel the risk level is such that they basically get rid of that, and you either end up in banks that are not in any way connected with the U.S. financial system or simply cash transfer type activity.
Right. So you mentioned the issue of corruption, and that's no small issue when we're talking about this, because as what regulators have been focused on is the threat of money laundering. And a lot of financial institutions wonder, how can you go into Africa, India, Bangladesh, and do these small transactions without running afoul of money laundering rules? What's been your thinking on this?
Well, when somebody has a mobile phone in Africa, you can see who they've called, you can see where they're located, you can see their whole transaction history, and we have that on record. So would you rather have that or just have these $100 bills that the U.S. chose to print and hand out all over the world? This is the most attributable part of the financial economy. This is like people using a credit card. It is, in a sense, it's just a debit card type system where you have good funds and pretty modest transaction cards. You don't have the card, and you have much better ID. It's not just possession of a card. Particularly as these things get more sophisticated, it is because it's your center of communication, because you can have bio ID, including fingerprint and other things. It's way, way better than any credit card, check, or cash money thing has been. So people want to see what's going on in economies for taxation, for being able to model what's going on with the economy in terms of what policies help it out. These attributed payment systems that most people are going to be willing to use because it's a new set of things for them, these are extremely advantageous systems for many governmental reasons.
Right. So this requires, your last two answers, if I understood you correctly, this requires a huge focus on innovation, real innovation, right? Creating systems that are able to vet these transactions and be enough to track them and to convince governments. So in terms of the technology, with a nod to the Inno tribe that was here at Sibos, in terms of the technology that's being built, where is that being built for financial inclusion? Where have you seen that happening?
Well, building a switch that checks a balance here and creates the record and records the ID information. There are many such systems that exist, and the level of software difficulty in building those systems is not it's not undoable. So we're not going to have a technology problem either in terms of the fixed cost of developing the software or the cost of running the system. Now, whoever runs these systems are going to have to be serious people. This is not, something you want some fly-by-night thing, because these things are dealing in money, so they will be attacked. And some of them you'll have a big commercial provider against who will put all of their reputation and net worth on it working well. Some of them will be open source things where simply the community looking at it and trying to understand, can that be attacked? And over time it'll go down a learning curve where it will be attacked, and if to the degree that's successful, you would have to replay the transactions. That's one of the beauty of attribution, is that your recovery function is slightly superior to non-attributed cases where whoever the unknown holders of the quote currency quote are, you're not able to make them whole.
Mm-hmm. So one of the interesting things about financial inclusion is when we talk about it, we talk about poor people in developing countries. We don't really think about their gender, but only 37% of women in these countries have bank accounts. And I was looking at the website of the foundation, And one of the goals that it advocated was that if we have financial inclusion, if the poor have these bank accounts, that women will be more likely to become the heads of households, that they will be running the money. Now, that's not just financial engineering, that's some social engineering. So what happens between here and there?
Well, there is a tendency of the money that women earn to be used towards the good of the family more often than the money that the man earns. Now, what you'd like to do is two things. One is to make sure that the woman gets even greater control, can budget things, set things aside, so it's not that you just can go and grab the cash. That really when you sell the crop that you make it very hard not to wait to spend it on education or the seeds for next year. The other thing you can do is get the whole family to be a little more thinking ahead and planning. And we saw in the interface there where the phone screen got a little bit bigger, you can use this to plan ahead. So we do think this serves the people being smarter about savings, including letting a woman partition some of the family's money for those things that she has maybe the greatest sense of how critical they are.
Mm-hmm. And so another thing that women like to use very often, what we see is remittances and a lot of peer-to-peer payments. And so in those peer-to-peer payments, where are we in that development when it comes to financial inclusion in Africa or Bangladesh?
Well, peer-to-peer is just a great application of a digital payment system, and that's why it's good that we not create this asymmetry about merchants. Partly we want it to be trivial to become a merchant. We want a guy who runs a pedicab to be a merchant from the very beginning. Somebody who goes and does 4 hours in your field and works for you, can be a merchant, and you can pay him. And so, everyone should be able to move money back and forth. There certainly will be applications that recreate what a micro-lending group was, but by doing it on a digital system, the overall interest costs that are involved should be a lot lower. You always have the money lender, the person in the village who knows you well enough that they can charge you a lot of money and somehow be sure that they have enough power over you or your collateral that they'll collect. That we have to outcompete that because that's a often very high interest way of doing things. Here, the paying your friend or loaning money to your friend, whether that's two people or a group of people, that's simply going to be an application, and in different location, that'll be groups of women or groups of families or villages that decide how they're going to support each other financially. And nobody's ever seen these things because, as long as it was just money that's just in one person's pocket, this idea of what are the rules and how can you do things together, there haven't been applications.
Mm-hmm. And so in terms of some of the most effective kind of digital payments that you've seen, which ones do you think really stand out?
Well, I think the agricultural economy is huge. The reason I keep bringing that up is over 75% of the poor people in the world are farmers. And the number of times we get stuck in the thing of, well, why don't they buy fertilizer? Because they'd have this huge payoff. Well, they don't have enough credit to buy fertilizer. Well, why don't we just break the cycle? We'll give them fertilizer the first year, but then when they have that nice harvest, have they had the discipline to save it for when they'd have to buy fertilizer the next year? And that it seems tragic that you're just not getting the output, and that's their activity, both for the food they eat and all the cash they have. And that's most of the poorest people there are. In every country that's ever escaped being in poverty, it was by raising agricultural productivity. And so there's a financial enabling piece. So if I could have one, the first app that I want is people who let them manage their money that comes in from agriculture and save for agriculture, let them manage that in a smart way. The next might be an application that lets them plan for their kids' education. And, it's awful to go to school for 3 months, but then, oops, we don't have the fee for this month, so, go back next month. Well, that might be a little confusing to miss that, and then next thing you know, you don't pass the exam, which is what you have to get into high school. So that's another one that's pretty important. There's some health things that unfortunately governments don't provide that making it easy to borrow money for those things would be important as well.
And so one of the things when we talk about digital payments that's also important is the rights of the consumer and the rights of privacy. And so how long will it be before we hammer those out? And what should they look like ideally?
Well, there's lots of attributed payment systems in the world today. Your checking account is attributed. Your credit card payments are attributed. In fact, almost all the large payments that most of us do, assuming there aren't that many drug dealers here, we do attributed payments. And, we buy a house. It's a big thing. There are government laws that allow the government to go in and see that information. The IRS has cases where they might be allowed to see the information. The FBI, a lot of that requires a court order. And so there's a sense that, hey, if that's a person who's engaging in terrorism or a reasonable chance that a judge thinks they are, the idea that you can go in and see, they've been buying a lot of dynamite recently. That's pretty interesting. That's for our common good, that people, pay their fair share of taxes or aren't money laundering or, not buying things that might be used for violence, and we'd like to catch that in advance. So I think there always will be, and should be, the ability of the government when it's properly monitored to go in and see what's going on with large financial transactions. It's very hard to say no, they can never see these things, because then any kind of behavior just got sanctioned. And we do have laws about these things. The government is actually fairly inefficient at how it sees these patterns. In a world of big data, they ought to be more efficient, but because they're going to be more efficient, we want to make sure the monitoring rules are better. And the same, all the issues that apply to what phone number did you call, various things like that. They're going to have to be different levels of monitoring, and financial transactions doesn't escape that idea that the right judicial authority under the right probable cause should mean you can see that information. Strangely, the only thing that avoids this type of visibility is the non-attributable stuff, which heretofore has meant physical goods or currency. Now, there are forms of Bitcoin where that's become now a non-attributable way of moving money, and it avoids people having to be physically in the same place. It avoids that if it's $1 million, it's not as big as it used to be. And so there's a certain customer set that's particularly attractive to.
Mm-hmm. Well, unfortunately, that's all we have time for. Ladies and gentlemen, Bill Gates.
Thank you. Good job.
Thank you.
Thank you, Heidi. Thank you, Bill. Yes, thank you. It was with some trepidation, I must say, that we had some trepidation about putting you in front of 4,000 bankers here. There was somebody who said, well, why don't we put up a banner that says, hello, Bill, welcome to Jurassic Park. But I'm really glad we didn't do that, because the vision that you sketched, in my mind, includes banks. And actually, I see it as an invitation or even a challenge to be part of this vision and make it happen. And I really see it as a challenge to the industry as a whole to be part of the future and maybe also really contribute to making the world a better place. It's a challenge to the industry. I also take it as a challenge to SWIFT, to us, to contribute with our technical skills, but also by fostering the dialogue and the discussion, as we do in places like this, and will continue to do, and really bringing the industry together. So thank you very much. And so with that, we've come to the end of yet another great Sibos. The first Sibos, in my mind, where we actually had people queuing for the opening plenary a half hour before the thing started. That must be a first. In other respects, like last year, I stand here tired, yet inspired. Inspired by the insights I gained, inspired by the energy you all brought, the dialogue, but really also by what I see as momentum and a willingness to truly work together as an industry and work on the opportunities that we have. So with that, like last year, I will now take off my tie to formally declare this Sibos over. Thank you. Thank you all, and I'll hope to see you next year in Singapore. Thank you.